What's up, everybody? Hey, check it out. Last time we talked about what is hedging, but now we're going to talk about what is a hedge fund. So as always, I'm your guy Markeith Price. This is Move Progress Productions. We're going to get into it. As always, keep doing your thing. I hope you guys are staying motivated. You guys, let's get right into what is a hedge fund. All right, so I'm going to zoom in as always because if you guys are new to the channel, I'm visually impaired. So I zoom in so that I can see and read so that all of my followers can follow along with me. All my subscribers, you guys are my family. You guys are my friends. So I want you guys to share this video. Make sure you like it. As always, much love. All right, so what is a hedge fund? Hedge funds are actively managed investment pools whose managers use a wide range of strategies, often including buying with borrowed money and trading exotic assets in an effort to beat average investment returns for their clients. They are considered risky alternative investment choices. All right, so here's another great way to look at as a hedger or a hedge fund. I think this, once again, I have been butchering this whole presentation. I'm sorry. I should have checked my spelling. But a hedge fund is a place where a group of investors give their funds to experienced hedge fund managers in hope that they can keep their investment safe and grow their investment through different financial instruments with different tools and techniques. So hedge funds, pretty much, they invest in whatever they can get their hands on. They'll invest into technology, invest into gold, silver, real estate, cash, foreign exchange, all the bonds out there. They'll try to find things that you never even thought was a way to make money, but it's a way to keep that money for whoever they're hedging for. So a company will come in and they will put their investment into a hedge fund and will be expecting for that hedge fund person to, or the hedge people, to make money, more money than just a regular investment. It's to keep the money and make more money. So it can be stocks, it can be on multiple things, from gold to silver to land to, that's real estate, to selling. If they're growing trees and that's a way to make money, more money to help the fund, that's what they'll do. All right, so we're going to get into the next slide. Hedge fund manager. What does a hedge fund manager do? And I kind of briefly already touched on that. From Investopedia, you can see here a hedge fund manager is a firm or an individual who makes investments decisions, and oversees the operation of a hedge fund. Managing a hedge fund can be an attractive career option because of this potential to be extremely lucrative. To be successful, a hedge fund manager must consider how to have a competitive advantage, a clearly defined investment strategy, an adequate capitalization, a marketing and sales plan, and a risk management strategy. So to be a hedge fund manager, it's a lot that goes into that. You got to have a strategy. You got to understand financial analysis, technical analysis. It's always good to understand data analysis. It's always good to be able to understand all of the different types of investments out there, what's going on in the news, what's going on, what do you think future-wise, having conversations with other investors professionally and on the side to just really, well, it depends, because if you are actually working for a firm, you got to keep your conversations basically to a minimum. But it's always important to know when you're a hedge fund manager. All right, so traders. Who is a trader? A trader is an individual who engages in the buying and selling of financial assets in any financial market, either for themselves or on behalf of another person or institution. The main difference between a trader and an investor is the duration for which the person holds the asset. Investors tend to have a longer term time horizon, so they keep their investments for a long time, while traders tend to hold assets for shorter periods of time to capitalize on short-term trends. So a trader, you can basically be someone that you could trade real estate, so buying and selling real estate, or you could be buying stocks, you could be buying bonds, you could be buying different things, but mainly you're going to stick with stocks, foreign exchange, and of course, there's a new thing that everyone's trading with is crypto, and they're trading a minimum of a couple hours or maybe a couple minutes to all the way to a year or 2 years. But typically when you're doing trading, if you're doing day trading, you're trading for the day, and if you're doing swing trading, you're trading for a couple days, couple weeks, a month or two, and sometimes it can be as long as a year or two, depending on how long you want to stay in that trade. But an investor typically will want to hold onto that investment until that investment increases by a big margin. So if you invest into a indice like the S&P 500, you want to hold on to that that indice for a very long time versus selling it off within a year. So you typically, that's one of your safety, you could say stocks, but it's really an indice. So we can get into what is an indice later on, but that is what a trader is. We all do some type of investment for the most part, somehow, some way. And yeah, hopefully you guys have learned something from this presentation thus far. Hey, so you guys drop some fire emojis in the comment box if you guys are getting something from this. If you guys are learning something, let me know. Put the scroll or the diploma that you guys are learning something from this. Put it in the comment box. Make sure you like, share, and subscribe as always. All right, so we're going to talk about books to read when you are trading or wanting to be a hedge fund investor, but just to understand trade and maybe some foreign exchange, because that's mainly what I've been trading is foreign exchange, and I've been investing into stocks and then some indices. So if you want to do foreign exchange or just trading period, the book Fibonacci for the Complete Idiot by Gene Grossman is a very good book. Trading in the Zone, which once again I have messed up the spelling on this presentation, but Trading in the Zone, you guys, I will make the list in the comment box, by Mark Douglas. Stock Market Investment by Michael Bateman is a really good book. So you guys should go and check that out. I hope that you guys have learned about hedge fund in this 2-part series: hedging, derivatives. Remember, a derivative is a security, and remember, a security is money. basically money, gold, bonds, stocks, indices, things that you're trading, things that you are investing into. Security can also be a house, something that has value to that. As well, I hope you guys learned about hedging, which means that you are trying to keep something secure. Now, there's a little bit more complex complexity to what hedging is in like indices or trading or foreign exchange, that different things like that. But you're basically just trying to make sure you lose the least amount of money. You don't want to lose a lot of money. Whatever your investment is, you want to keep that and make more. Here's some citations. You guys can check that out. Keep it on the screen for like 5-10 seconds. I'm going to go to the very beginning of this slide and just say to you guys, keep doing your thing, stay motivated. As always, like, share, subscribe, turn on that post notification button when you are getting done with all of these videos. You can come back again to check them out, share them with everyone. Hey, you guys already know, move, progress. Markeith Price signing out.